For the past 13 years, I put out a weekly video on YouTube called The Trading Edge, where I share some of the top trading ideas on my radar for the week ahead, along with a few awesome lessons that will help you become a consistently profitable trader. And a lot of times during these videos, before I record them, I put something up on social media saying, hey guys, if there's anything you want me to take a look at, let me know. And lately, the comments have been very consistent. Gold, gold, and more gold. And if you pull up a chart, it's not really hard to see why that is. You see, over the past year or so, gold has absolutely exploded. At one point, increasing by over 100% from 2025 to now. It's a little bit down now, but in that time, it was over 100% return. And no, if you're new to trading, that certainly isn't normal. It's not even what I would call a good year. It is a massive year. So today, what I want to do is answer the question that many of you guys have been pondering. Why is gold so popular? And in order to really understand that, we need to talk about something else. Safe haven pairs. Hey guys, Akil Stokes here. Welcome back to the Trading Coach Podcast. Two quick reminders before we hop in. One, this is a video version. We are going to be sharing some charts, so make sure you head over to the Spotify or the YouTube to check it out. And two, if you haven't done so already, support the show by either hitting that like button or following and subscribing either here on YouTube or on your favorite podcasting app. That way you don't miss all the other awesome stuff that I do on a weekly basis. Now, before hopping into the episode, I do want to do something that I've been meaning to do, and I was going to save it to the end of the show, but I know I'm going to forget. I wanted to address some of the poll questions that I've been asking you guys on the YouTube community. I keep saying I'm going to give you the responses during the YouTube videos, and I forget because we have more important things to do. So before I do so, I'm going to get to it right now, and I'll just go through a few of them. One of them, how often do you evaluate your strategies, right? So these are questions that I asked you guys to respond. Every few weeks, every few months, annually, and never. For this question, every few weeks was the winner at 35%. Second was every few months. Third was never, but doesn't surprising. I appreciate you guys being honest. And then fourth was annually. Another question is, do you think that a trading course alone, right, by itself, is enough to become a successful trader? Answers were simple, yes or no. 92% of you said no, and 8% of you said yes, which is good. I appreciate that. A lot of people think that you sign up for a course, the check clears, and you automatically become a successful trader. Great to see that you guys are a lot more knowledgeable. Okay, just a few more. One, which explained how you got started in trading the best. No trades, taking no trades until I had multiple strategies ready. This comes off the previous podcast about creating your trading business by starting with one or multiple strategies, all that fun stuff. The other one was I traded one strategy and then I added others later. 75% of people said I started off by trading one strategy and then I added other strategies later. And then let's do one more for you. This is a fun one. Do you talk to yourself during trading hours? There are three options. Yes, I talk to myself. No, I do not talk to myself. And yes, I talk to myself. And I also answer myself. 51% of you said you talk to yourself. Another 42% of you said I talk to myself and answer myself. 8% of you said no, I do not talk to myself. And I can tell you this, 8% of you are crazy. All right, so let's hop back into the topic. In a recent Trading Edge video, we discussed a little bit about supply and demand in trading. We talked about using an auctioneer as an example. When something is perceived as being cheap or a good deal, everyone's hand goes up and they bid and they keep bidding and the speed is really, really quick. However, once something is considered not to be a good deal, it gets more expensive, less people are interested in buying, and it slows down. So that's the difference between kind of price rallying up and then having loss of momentum patterns. But understand, supply and demand isn't just about price. It's also about human psychology. And specifically, the two things that usually move the market, greed and fear, right? In the trading and investing world, we call this kind of risk appetite or risk tolerance. And basically what that means is that that's our willingness to take risk in the market. So think about it like this. When people feel confident, when people feel optimistic, they usually chase higher returns, meaning they're willing to get a little bit more risky. But when people feel uncertain or scared, they want safety. And that's where safe haven assets come into play. So what exactly is a safe haven asset? Well, a safe haven asset is something that investors expect to either hold its value or increase in value. And this is specifically during times of uncertainty or times of volatility. And typically the uncertainty is what causes the volatility. So I guess those go hand in hand. So think about it like this. When the markets are shaky, whether it's political tension or threats of war or tariffs or other economic concerns, money tends to flow out of the more riskier places into the safer places. And that's exactly why gold had such a strong run. With all the political changes and the tariff drama, that should have been a reality show in its own right, and other global tensions, I guess you could say, over the past year or so, investors wanted protection, they wanted safety, and gold has historically been one of the most protective assets. But there are other safe havens as well, and specifically in the currency market, the Forex market, there are three major currencies that are considered safe haven, and then one that's kind of right off the medal stand. Ooh, the Olympics have been so fun. I think I'm going to be a professional curler. Anyway, those three are going to be this, right? One is going to be the US dollar, two is going to be the Swiss franc, and three is going to be the Japanese yen. And then over here to the side, outside the cool kids club, waiting to get in one day, is going to be the euro, where there's some debate where it's like, maybe, but maybe not. They're next in line in case they're the first sub, let's put it like that. So let's break down these safe haven assets or safe haven currencies. And of course, the most dumbed down Trading Coach podcast version ever. We'll start with the US dollar, right? The US dollar is considered a safe haven mainly because of a few things. One, and most importantly, the size of the US economy, right? It's kind of big. Two, and this one kind of feels weird for me seeing how I'm US based, the political and economic stability, ... relative to the rest of the world, ... maybe, ... historically, I guess. But I guess what makes up for that political and economic stability is the fact that the US dollar, hate it or love it, is still the global reserve currency, which means that the dollar is the main currency used in all of global trade, right? Many countries hold it in reserve. That gives it strength during uncertain times. Now, with all that being said, recently, and specifically we're going to talk about this 2025 to now period, so the last year and few months, things have shifted, right? Something happened in the year 2025. Someone came into the house that was new, and it might have been a new president. And this new president might have reintroduced tariffs that might have disrupted global trade. And on top of that, if that wasn't enough, he's put a massive amount of public pressure / threats on our Fed chair over concerns about the U.S. interest rate. He's even kind of inserted a few of his yes men, which have brought up all types of other concerns about the integrity of the FOMC and how they're supposed to be detached from the political landscape. All in all, this has sparked what has been referred to, and I kind of love this term, the Sell America trade, which essentially means investors are pulling out of U.S. assets, including the US dollar. Hence why we've seen significant declines. And again, I don't remember off the top of my head, but I'll throw a chart on for you. I believe since 2025, the US dollar has tanked by almost 13%, or the dollar index, I should say, by 13%. So you see, safe isn't always safe. On to the next one, the Japanese yen, right? Japan has a very large economy, and it has significant assets overseas. Now, the negative side of Japan is that it carries a very high level of debt, but much of that debt is domestically held, which reduces kind of certain risk, right? We won't get into all of that. But despite that, the yen has been extremely volatile, and there are two big reasons for that. One is government intervention rumors, ... again. And two is shifts in fiscal policy under the new leadership, the prime minister that just got elected a few weeks ago. Now, let's quickly talk about the intervention thing. We mentioned it in a few of the trading videos I did, but I don't think I really dove into it, and I know you guys are going to ask. Currency intervention happens when a country's finance ministry steps in to influence the exchange rate, right? In Japan's case, this usually means by trying to prevent the yen from weakening against the dollar too quickly. Sometimes this intervention is verbal. I forgot the cool name for it, where they come out and be like, oh, we're going to do this, we're going to do that. If this keeps going that, we're going to do this. If it goes above here, we're going to do that. And the reason for that is to kind of spark action from us investors. Oh my gosh, we get scared, fear, because they say they're going to do this, or oh, I want to do this. I want to buy yen because I'm greedy and I know I have the backing of the bank and like all that fun stuff. And the second way is they actually step in and intervene. Yes, and that is what you think it is. They start directly buying or selling. Yeah, it happens. So you can see with all of that funny stuff happening, why the yen may be in a state of unpredictability, I think that's a word, and volatility. I'm sure that is a word. Last up is the Swiss franc. Switzerland is known for delicious chocolates, but also politically neutrality. It also has a strong banking system and very, very, very low debt. And for this reason, the Swiss franc is often seen as being very stable, very safe. And recently, compared to the others, the US dollar and the Japanese yen, yeah, it has been that way, kind of boring and just existing. But here is something beginners need to understand. Boring, and in this case, strong against the other two currencies, isn't necessarily a good thing. You see, Switzerland is an export-driven economy, and what a stronger currency does is it makes those exports more expensive for other countries to import. And remember our little lesson on supply and demand, higher prices, less interest, maybe alternative options. This isn't a great thing for exports, and it can certainly hurt. So, how does a country deal with this hurt? Well, it's something we just mentioned with the previous currency, intervention. And trust me, I've traded through Swiss intervention before, and it was one of the wildest experiences I've ever seen. There's a chart in front of you. No, it's not a glitch. That actually happened. Do some research on it and you will be shocked. It actually changed the game for trading as far as like how brokers handle stuff, and educated a lot of traders on the fact that what we're dealing with leverage is a loan. And although we get loaned money, if we go below that loan amount, we can owe money. And it's interesting. Anyway, this proves that even the calm, steady Freddies, the ones that don't really have anything else going on, can be affected by what else is happening in the world, therefore making the safe haven not as safe as you think. So now the question is, right, Akil, out of these three safe haven pairs, which is the safest? And the truth is none, right? There is no perfect safe haven pair. The dollar is facing all types of political and monetary policy concerns. The yen is dealing with all types of intervention risks. The Swiss, that I just mentioned, has import or export stuff happening on it. So you can see there's no perfect solution. The thing about safe havens are this, right? Safe havens aren't about being risk-free. Rather, it's about being less risky than your alternative. Kind of like with the US dollar, how I say, man, the US dollar isn't great, or the US economy isn't great, but it's the best of the worst. So as a final takeaway, I want to say this, and this was the title of a recent video I did, or at least a thumbnail title for it. As traders, we don't want to marry our opinion. We want to follow the flows. You want to pay attention to what the risk appetite is or the risk tolerance is. And we need to understand that even a safe asset comes with its own volatility. And if you're ever in doubt about that, well, I have a simple solution for you. Just buy gold. All right, guys, I hope you enjoyed today's video. If you did, show me some love, hit that like button. Make sure you subscribe. There are shorts uploaded to this site every single day. Quick trading tips just for you. And do me a favor, I'm gonna put a poll question up as soon as I'm done recording this. Which of the safe havens do you believe is the safest? US dollar, Swiss franc, Japanese yen, or should I put in gold? I'm gonna put gold there as well. and then we'll kind of share a few of those results in a future episode. All right, until next time, plan and trade your plan. See ya.